What is going on, XRP Army? Welcome back to the channel. Today we are not just talking about another day in the crypto markets. We are discussing what could very well be the single most important turning point in the history of digital assets. If you are holding XRP, or if you have been sitting on the sidelines watching the charts, wondering if you missed the boat or if the ship is sinking, you need to stop everything you are doing and listen very closely. We are looking at a convergence of events that happens maybe once in a decade. I am talking about the kind of setup that creates generational wealth, but also the kind of volatility that shakes out the weak hands right before the finish line. Over the last 48 hours, the data pouring in from on-chain metrics, the whispers coming out of institutional boardrooms in New York, and the legal maneuvering in Washington, D.C. have painted a picture that is drastically different from what the mainstream media is telling you. They want you to think XRP is dead. The data suggests it is coiled like a viper ready to strike. Today, we are going deep. No fluff, no hype, just the raw, unfiltered truth about why we are seeing this massive breaking update and what it means for your portfolio. Let's address the elephant in the room immediately: the regulatory landscape. For years, the SEC lawsuit has been the dark cloud hanging over XRP, suppressing its price while other assets reached all-time highs. But something has fundamentally shifted. We are no longer speculating on if Ripple will survive. We are now looking at the post-lawsuit era. The legal experts who have been following this case day in and day out are now signaling that the finality we have been waiting for is imminent. This isn't just about a settlement or a verdict. It is about the establishment of legal clarity in the United States, the world's largest financial market. Once that final gavel drops, the floodgates open. You have to understand that major US banks and financial institutions, the ones managing trillions, not billions, cannot touch an asset that is in regulatory limbo. They have compliance departments that strictly forbid it, but the moment that security label is officially and irrevocably removed, or a settlement is reached that provides a clear runway, that capital has a green light. We are seeing signs that these institutions are already positioning themselves. Look at the over-the-counter OTC desk data. The volume there is spiking. This tells us that high net worth individuals and institutional players are buying XRP, but they are doing it off exchange so they don't spike the price before they have filled their bags. This is classic accumulation behavior. Furthermore, we need to talk about the utility, because at the end of the day, hype fades, but utility is forever. The XRP ledger is currently processing transactions at a speed and cost that makes the traditional Swift banking system look like it is operating in the Stone Age. We are seeing a massive uptick in ODL, on-demand liquidity usage. This is not retail. Investors buying 500 coins. This is payment corridors lighting up between Japan, the Philippines, Mexico, and the Middle East. Ripple has been silently building the infrastructure for the Internet of Value, while everyone else was distracted by meme coins. The recent integration of the automated market maker, AMM, on the XRPL is another game changer that people are sleeping on. This allows XRP holders to earn yield on their assets natively on the chain, locking up supply. When you lock up supply while demand for utility increases, basic economics dictates that the price must appreciate to accommodate the liquidity needs. It is a supply shock in the making, and let's not forget the upcoming stablecoin, RLUSD. This isn't just another stablecoin. This is the bridge that brings massive liquidity into the XRP ecosystem. It pairs directly with XRP, increasing the burn rate and usage of the ledger. Now, let's pivot to the technical analysis, because the charts are screaming at us right now. If you zoom out to the monthly time frame, we are witnessing the compression of one of the largest symmetrical triangles in the history of crypto. This pattern has been forming since 2018. In technical analysis, the longer the consolidation, the more explosive the breakout. The Bollinger Bands on the monthly chart are tighter than they have ever been. Historically, when XRP bands get this tight, we see a move of several thousand%. I'm not promising you a specific number, but the structure is there. We are also seeing a golden cross scenario forming on the weekly time frame, where the short-term moving averages are crossing above the long-term averages. This is a lagging indicator, but it confirms that momentum has shifted from bearish to bullish. The RSI, Relative Strength Index, has reset, giving us plenty of room to run before we hit overbought territory. However, you must be prepared for volatility. The market makers, the whales who control the flow, will likely try to engineer a fake out to the downside to trigger stop losses before sending the price vertical. This is why leverage trading is so dangerous ridiculous right now. If you are leveraged 10x or 20x, a simple wick down can wipe you out before the rally even begins. Spot holding is the only way to survive the turbulence of a true breakout. Beyond the charts and the courts, there is the macroeconomic backdrop. We are entering a period where global liquidity is starting to expand again. Central banks around the world are pivoting from tightening to easing. When money printing starts, hard assets and scarce digital assets tend to outperform everything else. XRP is uniquely positioned because it is not just a store of value, it is a bridge currency for all other currencies. As the BRICS nations and other global economic blocs look for alternatives to the dollar-dominated system, the XRP ledger offers a neutral, decentralized, and efficient platform for settlement. We are seeing pilot programs for CBDCs, central bank digital currencies, popping up everywhere, and Ripple is advising many of these nations. While some in the crypto community hate CBDCs, the reality is that if they run on or bridge through the XRPL, it creates immense demand for XRP. This is the God candle scenario that people talk about, a sudden, violent repricing of the asset based on its adoption by the global financial system. Let's discuss the psychology of this market for a moment. It has been exhausting to be an XRP holder. I know it. You know it. Watching other coins pump while XRP stagnates is psychologically draining. This is by design. Markets are devices for transferring money from the impatient to the patient. The FUD, fear, uncertainty, and doubt you see on Twitter and Reddit is often manufactured to get you to sell your position cheap. Every time you see a headline screaming that Ripple is doomed, check who is sponsoring that content. Usually it's someone with a vested interest in a competitor. You have to develop diamond hands, not as a meme, but as a disciplined investment strategy. You need to have a plan. What is your exit strategy? At what price points will you take profit? If you don't have a plan, you will be ruled by greed on the way up and fear on the way down. I suggest writing down your targets today while your head is clear so you don't make emotional decisions in the heat of the moment. Another critical aspect we cannot ignore is the potential for a Ripple IPO, initial public offering. While the company has stated that an IPO is not their immediate priority due to the SEC situation, the buzz around it is undeniable. If Ripple goes public, it brings a level of legitimacy and valuation to the company that indirectly validates the XRP ledger. It brings Wall Street analysts into the fold who will have to dissect the business model, which relies heavily on the health of XRP. Furthermore, we are seeing the rise of crypto ETFs. We have the Bitcoin ETF. We have the Ethereum ETF. The logical next step, given XRP's status as the only other asset with regulatory clarity, even if partial, is an XRP ETF. Major asset managers like Grayscale have already signaled interest by relaunching their XRP trust. An ETF would provide a vehicle for pension funds and 401k accounts to gain exposure to XRP without dealing with keys and wallets. This is the institutional wall of money we have been waiting for. There is also a lot of noise about the escrow releases. Every month, Ripple releases 1 billion XRP from escrow. People panic and say, oh, they are dumping on us. But if you look at the data, the vast majority of that, sometimes 80% or more, is locked right back up. The amount that hits the market is used for ODL and ecosystem development. It is a predictable supply schedule, unlike the unpredictable inflation of fiat currencies. The inflation rate of XRP is actually lower than Bitcoin's inflation rate at certain points in history and is certainly lower than the US dollar today. The burning mechanism of transaction fees also makes XRP deflationary over time as network usage scales. As we move into an era of millions of transactions per second, that burn rate will start to become significant. We also have to talk about the integration of ISO 2022. This is the new global standard for payments messaging. Banks, financial institutions, and payment processors worldwide are migrating to this standard. XRP was designed from the ground up to be ISO 2022 compliant. Bitcoin is not. Ethereum is not. This gives XRP a massive strategic advantage in the world of institutional finance. When banks update their systems, they are looking for assets that speak their language. XRP is that asset. This is a slow-moving train, but it is an unstoppable one. The network effects of this standardization will be felt for decades. So where does this leave us? chaos. We are standing at the precipice of a new financial order. The old system is slow, expensive, and exclusive. The new system, powered by blockchain and assets like XRP, is fast, cheap, and inclusive. The transition is messy, and it is taking longer than we hoped, but it is inevitable. The technology is too good to be ignored. The banks are not fighting crypto anymore. They are trying to figure out how to own it. By holding XRP, you are effectively betting on the modernization of global finance. It is an asymmetric bet. The downside is limited. We have seen the floor, but the upside is rewriting the way money moves around the planet. In the coming days and weeks, keep your eyes peeled for official announcements. Ignore the rumors of insider leaks and stick to verified sources. Watch the 0 at 65 and 0.75 levels closely. If we break those with high volume, we will likely test the 1.00 psychological resistance very quickly. Once we clear that, price discovery begins, and that is where the fun starts. But remember, the most important asset you have is your mind. Stay calm, stay informed, and do not let the market shake you out of a position you have held for years. We are in the end game now. The pieces are on the board, the moves are being made, and the checkmate against the old financial system is approaching. I want to thank you for sticking with me through this deep dive. It is crucial that we educate ourselves, because in the crypto world, knowledge really is power and profit. If you found value in this breakdown, if it helped clarify the chaos for you, then I have done my job. This is a journey we are on together as a community fighting for a fair and open financial system. Smash that like button if you are ready for the breakout, subscribe if you haven't already, and hit that bell notification so you never miss an update. I am not a financial advisor, so please always do your own research. Stay strong, stay patient, and I will see you on the moon. Peace.